Kong. Now, my next guest shares those concerns about China, but he says other countries like Japan, Indonesia and Thailand are in a new bull market and set to benefit from healthy economic growth. He's Arnout van Rijn, Chief Investment Officer at Robeco in Hong Kong. A very good morning to you, sir. Thank you for joining us. What do you make of the latest news we're having from China that actually the government is now obviously worried about asset bubbles forming there?
Yeah, well, it seems like they've overdone it a little bit with their stimulus package, and they are now looking for what so many people refer to as an exit strategy, right? It's difficult for them to continue on this path, although they're still nervous about it. They will have to tighten monetary policy, like last week's move on the reserve requirement ratio already indicated. I would say that I'm quite adamant that most of the bubbles that people talk about are actually untrue. I mean, when you look at stock market valuations, they're definitely far away from bubble levels. They're actually quite in line with the regional averages and long-term averages for the market. So that's very unlike 2007. And I also very much disagree with Jim Rogers that there's a property bubble in China, because what people seem to forget is that interest rates and mortgage rates are now at low levels, record low levels. And also in the past 10 years, of course, incomes have grown quite rapidly. So when you look at it on an apples-to-apples affordability ratio, then affordability is still quite decent for China property. So I'm not too worried about that yet. The only thing that may worry me there is fixed asset investment. The Chinese have been talking about moving away from investment-led and export-led growth to consumption-led growth, but so far they've been unsuccessful. And this whole fiscal stimulus, of course, has resulted in a lot of fixed asset investment taking place and probably keeping companies afloat in the industrial space that should not be there. So there's been no creative destruction, so to speak.
And yet China is not your favorite market in the area.
No, that is true, because expectations are quite elevated there already in terms of earnings growth. And I think there may be some disappointment coming there because, like I just referred to, if these industrial companies are seeing oversupply, it's inevitable that there will be some pressure on their margins. And also I think that the commodity plays like the coal and energy plays have been quite a bit exaggerated.
So we have to leave it there. Thank you so much for joining us, Arnout van Rijn, there, Chief Investment Officer at Robeco.